Alright, so this video is going to be about Robinhood Gold and whether or not you should try it, what it has to offer, that kind of stuff. So to get to it, you just go to account, Robinhood Gold, and that brings you to this screen. So it says get started with gold, unlock new opportunities with in-depth research and data, bigger instant deposits, and access to margins. So as you guys know, I use Simply Safe dividends for most of my research, but that is super expensive. It's $400 a year. So if you're a Robinhood user and maybe can't afford that, this creates a little bit of an option here for the Morningstar Professional Research. Now, if we hit learn more, basically Morningstar is an independent investment research company with a whole team of people researching companies and stocks. Usually they post both sides of whether you should buy or not buy. So it's a reputable company and gives you much more information than just Robinhood on its own. So with that, it's through the app, which is also nice. You don't have to go digging around the internet doing your research. So if you don't have any access to anything and you're on Robinhood, that might be a good idea for you. The next thing would be the $5,000 instant deposits. So I think the threshold without gold is $1,000. So if you're doing $5,000 at a time, obviously this will help you out if you want to do that. If you're moving money in and out of the platform, this would also be something maybe you're interested in, but I would say for the general user, this probably isn't that big of a deal, kind of a case-by-case thing. Now the next thing is margin investing. So what is margin? It's borrowed money. Basically, you can use this to leverage your investments. Now, I was hoping to get in on Robinhood with their $1,000 of free margin. That's part of gold. You get $1,000 free, but they decided with my portfolio the way it is, it's too risky, so they didn't give me the full access to $1,000 in margin. But for a diversified portfolio that is lower risk, you'll get $1,000 for free, and then you can do more than that, but there's a 5% fee that you pay at the end of the month for each borrowed amount. So basically, the borrowing limit is what they will show you in the app. The total amount that you can have is based on your cash and volatility of your holdings, like I just said. So yeah, they kind of take it as a case-by-case thing as well, but it is a good option for traders to leverage their money and try to bring more money home at the end of every trade. So if you are trading, obviously you probably want to expand your account with a little bit of margin, help you grow faster, but just be careful. Obviously there's more risk with that. So the last thing is the level 2 market data. So let's keep tabs on the real-time bids and asks directly from NASDAQ. Now, as you guys know, Robinhood is 15 minutes behind roughly of what the actual market's doing. So this will just tell you what the current bids and asks are, apparently in real time. I still wouldn't really rely on this personally, but it basically will tell you the spread on each stock. So whether or not you're getting in at a good time, it might help you make more sophisticated limit orders, for example, but whether or not that's useful to you, that's kind of for you to decide. So in a nutshell, that is Robinhood Gold. It's really on you whether or not you want to use it. I don't think it's enough for me, but I have the capital to use something like Simply Safe dividends. I'm a dividend investor, so on top of that, it's a dividend tracker. So that's why I went that route. If you're just getting started, I think this research is a good option. It's only $5 a month, but you just got to remember this is eating into what could potentially be money invested. So you really got to weigh both sides of that. But again, for traders, you probably want access to margin. So if that is what you're looking for, it should be pretty much a no-brainer for that. So whether or not you want to use Robinhood Gold, that is up to you. But again, my opinion is it's probably not the best option, especially for dividend investors. There's just better options out there, and usually dividend investors don't need margin, and whether or not the bid or ask spread, I mean, it's just not something you usually need. It's just your dollar cost averaging into the market anyways, so you pretty much just do your deposit and move on. It's not too price focused, so that is why I don't recommend it, because I'm a dividend investor. But again, traders probably want to take a look at this. I'm going to stop rambling though. I will see you guys in the next video.